So good day, guys. I hope all of you are well. And today we'll be looking at this inventory question. So the main things that you must always remember when doing an inventory question is to always read and find out like which inventory system are they on. Remember, we have the first in first out inventory system, and we can also have the weighted average inventory system. So basically, the difference between the two is that with the first in, first out inventory system, we will first get rid of the goods that we purchased first. So meaning the goods that were there first or we purchased like maybe in the prior financial year will be sold first before we sell the goods that we purchased in this current financial year. So basically, we must always remember the two. And with the weighted average, we'll just sell the inventory that's on hand. It won't matter whether the inventory was bought first or last. So with the first in, first out, it's implied in the name, like first in, first out. And with the weighted average, we'll just sell whatever is on hand. So also the valuation will be different because with the first in, first out, the goods that were bought first, they'll be sold at initially, let's say we'll get rid of them in our books at the initial price they were acquired for. And with the weighted average, we'll calculate an average between all the goods on hand, including old and new, and we'll get a price, a cost, let's say, not a price, a cost that will dispose of them. And all of the goods that we'll sell in the financial year will be disposed at that average price, at that average cost. But with the weighted average, we'll basically sell them at their individual cost by which they were purchased for in that period in which they were purchased. So after that, let's start with the question. So it basically says, ne, smartphones Ltd import cell phones and other electronic equipment from various countries. Smartphones mainly trade in A phones and S phones. Smartphone values its inventory on the first in, first out. So as you can see here, they're using the first in, first out inventory system. So here, it's the first in, excuse this, I'm just trying to highlight here. It's the first in, first out. Basically, on the first in, first out basis and make use of the periodic inventory system, which means they do not account for their goods using cost of sales, which means once they acquire them, they'll use purchases. They'll not capitalize their goods to inventory. They'll just put them in purchases. It says the normal selling price for A phones and S phones is 6,000 and 5,050 respectively. The cell phones are also sold at different prices. Okay. It says you have been recently appointed as an accountant at Smartphones. Smartphones has a 31 December financial year end, and the financial statement needs to be prepared for the previous financial year. So let's continue reading. It says the following information for the year ended 31 December 2015 is available. So basically, let's look at this inventory. It says the opening balance for like the total opening balance is 350,000, but it says 30 A phones at 5,000 per phone were in the opening balance, and 50 S phones at 4,000 per phone were in the opening balance. Then it says inventory closing balance. It says 60 A phones and 30 S phones, but the total is not given to us. Then it says stationary opening balance is 600 and stationary closing balance is 520. It says on the 31st of March 2015, Smartphones imported inventory. The following information in relation to the transaction is available. Okay, let's continue reading. It says 50 A phones were imported from America at a purchase price of 5,000 each. Smartphones incurred 15,000 of import duties on the transaction, of which 2/3 were claimable import duties. So remember, guys, with inventory, we're only going to capitalize costs that will be incurred to get the inventory into its working condition. So basically, all the costs that will be incurred to get the inventory to our premises so that we can use it will be capitalized. But we're going to exclude costs which we can claim, like we can claim back, let's say from SARS or something, or we can get our money back for which we spent to acquire that inventory, we can claim back. So those costs will not be capitalized to the inventory. And it also, the smartphones also incurred storage costs of 1,000 and courier costs of 600 on this transaction. So with storage costs, they are not part of they won't be capitalized to the inventory or the stock, because storage costs, they're not costs incurred to get the inventory to its current working condition. Because think about it, like it's not, let's say right now, storage costs are not necessarily costs that it's not needed to get the inventory to our premises. Just think of it from that perspective. Like storing goods means you already have them and they're stored somewhere. It's for safekeeping, meaning it could be stored there waiting for something, but it's it's sort of like an in-between cost. It's not really, it's not material to the goods, because if we didn't incur that cost, the goods would still come to the premises irrespective. Like it's almost like a, let's just say it's not material. Don't take it into account. I'm trying to find a better way of explaining it, but let's say it's not capitalized to the inventory. Just remember that. But courier costs, remember, if right now you import inventory and let's say your factory is in Johannesburg, but your inventory arrives at the ports, maybe in PE, Port Elizabeth, Cape Town, you'll have to get those goods from that place to Gauteng. So you'll actually have to incur those courier costs in order to get those goods to your premises. So those courier costs have to be capitalized. So let's continue reading. It says S phones. 40 S phones were imported from South Korea at a purchase price of 3,800 each. Claimable import duties amounted to 4,000. Smartphones paid 1,400 in total to a supplier in relation to storage costs. In courier costs, the invoice indicated that total courier costs amounted to 400. On 15 July 2015, smartphones bought stationery worth 200, which was paid for in cash. Okay, part B is not part of this question. It pertains to other things, so I'm not going to look at it. So let's go to the required. It says, with reference to part A, disclose the information in the notes of the financial statements of smartphones for the year ended 31 December 2015. The following notes are required. It's the accounting policy and the inventory. Okay, let's start. So with the accounting policy, guys, you must always remember, you must just state which inventory system they use. So if we start here, I'm going to say accounting. So usually in a test, if you get like the accounting policy, it's usually 3 marks because it will be given to you. So you just state it as given, accounting policy. So we'll say smartphones. Excuse my handwriting, guys. Uses the first in, first out inventory valuation system. Use the first in and first out and the periodic inventory valuation systems. So this is the accounting policy, and for this you'd get all your marks by stating this. So let's move on. So now we're actually going to calculate inventory. Remember, guys, when you are asked to calculate inventory, you only include in inventory the closing balances of all your goods, let's say of all your inventory, of all your stock. So basically, you include the closing balance of your A phones, as phones and stationery, because stationery or consumables or whatever, they are also part of inventory. So just always remember that. But we only want the closing balance. If they ask you to calculate inventory, only want the closing balance. With questions like this, they can ask you from calculate the inventory balance, the value of the value of the of cost of sales. So the questions can vary. So you must, with these type of questions, you must really know, you must really like be attentive to what they're asking you so that you don't make mistakes, because you can make a lot of mistakes by not reading the question carefully. So here they want us to calculate the balance of inventory. So I'm gonna write here, they're both question one. So I'm just gonna say 1.1, and here I'm gonna say inventory. And then here I'm gonna say a phone. And here I'm gonna say as phone. And guys, also keep in mind of the inventory system. This one is the first in, first out, and stationery. So the stationery balance is already given, so I can put it down right now. It's gonna be 520, because we only include the closing balance when we're calculating the balance of inventory. So okay, I'm gonna do my calculations right here below. So this will be the first one for a phones. I'll just say here, this is where I'll put the balance here. So I'll add them up and tell you at the top. So here I'll say calcs. So let's see what the opening balance was. So since it's first in, first out, they said they had 30 phones and they were going for 5,000 each. So with this kind of question, you must also be aware of time, guys. You must be fast. So it's 30 units times 5,000. So here it's gonna be 150,000. Then okay, let's read the phones. They're saying phones were imported from America. So here I'm gonna say purchases. I'm gonna say I'll just put a P and try and write it, purchases, so that we can see this was the OB, opening balance. So here they are saying they bought 50 units. 50 units. And then they are saying these 50 units cost 5,000 each. So it's 5,000. And these units, they also incurred 15,000 import duties. So I'm going to say import. Let me rather do it like this so that I don't confuse you guys. And do it like this so that it can be like nice and clear what I'm doing. So here it's gonna be the opening balance plus 30 units. I think that's 5,000. Yeah, that's 5,000 per phone. So let's go. That's 5,000. So here it's gonna be 150. Let's use the handwriting, guys. Then here I'm gonna say purchases. Then it's gonna be 50 times 1,000. It's gonna give us 250,000. And they also said they incurred import duties. I'm gonna say imports, but they only said they're gonna incur 1/3. See, so since they said 2/3 are claimable, so we're only gonna incur 1/3, which is gonna give us 5,000. Because remember, the ones that are claimable, they are not money back. So storage costs already explained to you guys like why it's not capitalized. Then we'll be left with the courier costs of 600. So courier 600. So 250 plus 5,000 plus 6,000 plus 600, it's gonna be 255,600. So here we also have to calculate the total value of this inventory, like how much is it per unit? Because with the first in, first out, you have to know how much, we'll have to know how much these 50 units individually cost, like for us, like in total, including their import duties and their courier costs, divide by 50. And that gives us 5,115,112. So this is the value for the A phones, ne? So let me do it like this so that we can be done with the A phones at once. So it says here they are saying the closing balance they had 60 A phones on hand. So which means we bought 50. So that means all 50 phones were still on hand. So we basically gonna have to add. So basically we had 30 on hand. We bought 50. So this is the closing balance first in, first out. So we had 30, then we bought 50, but our closing balance was 60. So which means we only sold 20. So we sold 20. So when we're selling, we're first gonna take out from the 30 here because it's first in, first out. So this is how it's gonna go. So when we're selling using the first in, first out, you have to take out from what was first on stock. So we'll take out from the 30. I'm gonna try and illustrate it here. So here it's gonna be less 20, and we're gonna be left with 10 plus the 50 that was bought. So in total here, we have 60. But since we have so 5,112, but the 10 was bought for 5,000, so we're gonna multiply this by the individual costs here. This one is gonna be times 5,000. This one is gonna be times 5,112. So this one is gonna be 50,000 plus the 255,600, which is gonna give us a total value of let me see, 305, 600, 305, 600. So that will be how much we put here for the earphones, 305, 600, the balance. So now let's do the S phones. Let's do the S phones. S phones. So the opening balance was, let me set it up like this so that we don't have to move about a lot. So the opening balance, the purchases, yeah, that will work. So I can quickly do it. It's the same principle as that one. So Here they had 50 phones at 4,000 per phone. So it's gonna be, so here they had 50 at 4,000 per phone, which is gonna give us 200,000. And they purchased, let's see, they purchased 40 phones at 3.8 each, and they also incurred import duties of 4,000 and courier costs of 400. So 3.8. Purchases was 40 times 3.8, which gives us 152. And then import duties. Import duties, I said, were, let me see the import duties. So they were claimable. So we won't include them. So we'll just include the courier costs and also exclude the storage, which the courier costs were 400. So import duties, they are claimable, so they won't be here. So let's say courier costs, courier was 400, which will give us 152, 152, what, 50 units. Oh, we bought 40. Sorry about that, guys. It's 40. I don't know where my head is at. So it's 40. So the price per unit here will be 3,810. So this is the cost of the purchases. Let's see how much stock they had at the end of the year. So let's move up. So they had 30 phones on hand. So this is how we're gonna do it. So they had the closing balance here. So it's gonna be they had 50 on hand, 50 on hand plus 40 purchases. So we have 30 left. So to have 30 left here, we have 90. So they had to sell this whole 50, and here they had to sell 10 so that we can have 30 left. So basically they sold 60 phones. So here it's 0, and then here it's 30. So we can have 30 phones left. So as you can see here, since it's first in, first out, these ones have all been disposed of, the ones that were at 4,000. So only left with the new one. So when I multiply this by 3,810, this is the price per phone, including the courier cost and the purchase price per phone. So it's gonna give us 114,300. I hope everyone is getting this. 300. So this is the closing balance of the S phones. So we'll have to put it here. We'll have to put it here so that, like, because remember, we only include the closing balance in inventory. So let's put it here. That'll be 114, 300. So when we add all of this together, it's gonna give us 420, 420, 420. The stationery, guys, remember what I said. In inventory, you only include the closing balances, and the stationery closing balance was already given to us. So there was no need to calculate here. there was no need to calculate the difference between the stationary board and whatnot, because we also don't know how much stationary items actually there. So we can just take the closing balance as is and calculate this. So I'll also be doing one where I'll also be doing it from the perspective if it was like a weighted average one, but you'll have to tune into like the next video. Thank you guys, ne? And I hope you guys understand this, because this is very important that you understand the diff in a test. If you get lost and you don't apply the policy which they gave you, which is the first in first out of the weighted average method, you use the wrong one, it could you could end up losing a lot of marks. So let's always make sure that we read carefully the required, so that we don't lose out on like easy marks. So I hope you guys enjoyed the video, and I'll see you guys next time.